All right, how are we doing today, Danny?
Hi, Christian. How are you?
I'm doing well. I'm doing well. Great to have you on today. Christian here with Driven by Marketing. We are an AI implementation agency. I have the pleasure to have Danny Newberry on here with us today from Value Investment Group. Danny, why don't you introduce yourself? Tell us a little bit about what you guys do at Value Investment Group and who you work with.
Yeah, absolutely. Just a quick update on that. So, Value Investment Group was kind of the prior company. We've rebranded in the last few years to Vail Commercial Group. It was a couple partners that came together, and we primarily focus on value add commercial real estate acquisitions. So we are in the retail and industrial space primarily. We're across 18 states, lots of different asset classes on top of retail and industrial, but I'd say that's our primary focus. And like I had mentioned, all value add. We're essentially finding stuff that's broken or mismanaged, underutilized, undercapitalized, and we go in and fix it up, fill it up, and maximize its value.
That's awesome. That's awesome. It's funny. I actually saw a post yesterday from one of my feed. And someone asked, when you're investing as a passive investor, do you prefer development deals or value add? And in your case, you're looking at value add deals. So I guess tell us a little bit about, with commercial real estate and real estate in general being such a big industry, there's so many different levers you can pull. What got you into looking for value add commercial real estate?
Well, I would say it's the potential upside that you can create in such a short window of time. That's what's really exciting about it. So, specifically on the commercial side, we're looking for shopping centers just for an example, we're buying a shopping center and it's got, 30% vacancy, right? And we're buying it based on in-place net operating income. So if the capitalization rate for the area, call it is 8%. And we go in and we fill up that vacancy in, call it 3 to 9 months, so less than a year's time frame. And now we're at 95% and we've increased the NOI, call it even just like 200,000 at a 10 cap, that's $2 million in added value, right? So there's a ton of equity to be had in these commercial deals if you can find them with that value add component. Go in there and really do you're driven by marketing, right? So you really ramp up the marketing, you really get it out there, you roll up your sleeves and do the hard work to fill up the vacancy. And then once you've done that and you've stabilized and seasoned the rent roll, you've added a tremendous amount of equity to that property by doing so. And so that's the reason that I like value add is because we're buying existing projects. We're taking a lot of the risk factor out of it compared to development. Development, you're really dealing with market cycles. And if you're in a good market cycle, that's great, but things can change year to year. And a development is not a quick endeavor, right? So it can take you, we're currently doing a development right now in Houston and we're probably going to be two and a half years in, and in 2.5 years economies change, asset classes become either more valuable, less valuable, or caps have increased or decreased, and you don't really know, right? We don't have a crystal ball. But if it turns against you, a lot of your projected value could be wiped out before you even get to market on a development deal. So we really like the value add strategy because we're buying based on what is with in-place cash flow already, typically, and all, really it's just by getting in there and doing what we do best and turning these projects around that we add, a bunch of equity and a bunch of of uh, of stabilization upon that asset.
Awesome. Yeah, force appreciation, right? And to your point with the development deal, like what about when material costs rise, right? Everyone saw that throughout the last 6 years when COVID happened, right? So that's really a good strategy there. So what got you into, the commercial in the first place, right? How did you kind of get started and get that first deal underway?
Yeah, so I started off in multifamily. I was actually in my first year of college, and I bought a vacant sixplex for about 155,000. I borrowed all the money from my best friend's dad at 8%, and ultimately over that summer, I fixed it up, filled it up, and it reappraised for 330,000. And I said, "Why am I going to go back to college for a degree I don't have to make less money than I just made on my first real estate deal?" So I decided to go full time, and I think I got up to a couple hundred units. I think it was like something like three, four, 500 units very quickly. And I was buying, call it like these fourplexes, the 10plexes, and realized, hey, I gotta, in order to get bigger, I gotta buy, larger apartment complexes. So then I bought a 48 unit, I bought a 138 unit, it just kept scaling, right? But one of
Hmm.
my investors, he only owned commercial real estate. He owned, retail, industrial, office. And I asked him one day, I go, why don't you own any multifamily, but you invest with me on the multifamily side? He goes, oh, I don't want to work that hard. I go, what do you mean? And I quickly was like, I got to figure out what this guy's doing. So I joined a commercial real estate mastermind group, and I remember that first year I was in the group, I bought one shopping center, one industrial building, and one medical office building, all value add deals, right? And I fell in love with the triple net business because with the apartment complexes, you get people in there and they bang up your units. They, you're all the capital that you put into an apartment complex, especially if it's a value add, you go in there, you fix it up. Typically if it's a Class C project in a, you're going to see all those improvements you did basically in worse condition 24 months after the fact. And so I was quickly realizing how much capital reinvestment you had to do into these apartment complexes because I was not buying Class A or B, I was buying true Class C. Some of it was maybe considered Class War Zone. But at the end of the day, your tenants don't pay for taxes and insurance and common area maintenance on apartment complexes, but they do in retail and industrial and most office. So, yeah, I really felt like I had found a niche in finding really stabilized cash flow. I was looking for more of something that felt more consistent. And so when I would sign a 5-year lease, I knew I could really project out my expenses, my income, and it was pretty steady Eddie after that. So really kind of felt found my niche in the retail and industrial space because that's what we love doing. We love turning those projects around. We really we focus all over the country on those assets, and it's been a good ride, man. It's been a really fun asset class to be in, and we've enjoyed it.
That's awesome, man. That's so cool. And it seems like you've had a lot of success so far. Now, can you tell us, about one of the lessons, the big lessons? Was there any, any time that something didn't go as planned? Right? What was that if you care to share, and kind of what was the lesson learned, and moving forward, how to kind of not put yourself there again?
Yeah. So I would say having a decent and I'm not going to say a big team, but like a very nimble team that you can rely upon. I think it's really important that, as an entrepreneur, you typically start off and it's just you, right? And the minute that we started hiring and started putting, a bunch of A players around us, we were really able to scale in a big way. And, I think that has been a very big game changer. I wish I would have done it sooner, to be honest with you, because I am seeing that, the amount of benefit that you get from having a great team around you to talk about the projects in depth, to come up with the business plans, and to free up your time as a business owner. So, I really have enjoyed building out a team, and to date we've done north of $250 million in commercial transaction, and we currently run over $100 million portfolio on a day to day. So it's good.
That's amazing. Awesome. So with that portfolio and all these new deals, where are you finding deals? And kind of, can you talk about maybe where we are in the market right now as far as like what's changed over the past 4 to 8 years, considering all of the changes that we've gone through as an economy? Where are those deals coming from, and what's kind of what's the strategy now, right? Because everyone has a plan until they get punched, right? Like Mike Tyson said. So in real estate, there's always a way to win, but the way changes a lot, right? We had 0% interest rates, right? We had low rates. Now we have all the refi troubles. So what's the strategy today? What are you looking for? And are you working with investors? Do you have all the funds coming internally? Kind of what's the strategy there?
Yeah, and I would say that that is probably part of our niche is that we're not pigeonholed to any one asset class. We understand multifamily, we understand development, we understand retail, industrial, office, medical, pad site redevelopment, readaptive use. So, I mean, we've done a lot of different things, and I feel like, that gives us an edge depending on the market cycles because, as you know, things are constantly changing and asset classes from one day to the next can be the hottest thing out there to, one of the rougher, asset classes to be in, like multifamily. I mean, it couldn't have been any hotter over the last decade up until, probably 18 months ago. And now, where are we seeing a majority of our REOs is office and multifamily. And it's, absolutely that where, we had cheap to free money not that long ago, and then interest rates doubled, and then all these guys who are doing the, hey, I'm going to take out bridge debt for 2 years, I'm going to go in, fix up these units, increase my NOI, and then do a cash out refinance. Well, the problem has been when interest rates double, all of that equity gets wiped out even after you do your business plan and get that operating income up, right? So
Hmm.
a lot of people are hurting right now in that space. And so just having the ability to jump in at the right time makes a big difference, right? Because now it's like, hey, I didn't want to be in multifamily for a long time because I just felt like every deal I underwrote, I was getting outbid. I just couldn't
Hmm.
compete because I felt like I couldn't pay as much as the next guy, right? Or the next 10 guys. And now it's like, I can go out there and I can be very meticulous in what I buy and what I pick and so yeah, we're again always focused on that value add component. Everything that we're buying, we like to buy it below replacement cost. We like to make sure there's lots of upside. We like creative terms, and so I would say the majority of what we're focused on is truly just that, right? And it doesn't have to be any particular asset class. And I
Sure.
would
So
say right
essentially,
now, going back to your question of where are we finding the deals, I think that it was very hard to find deals after COVID. Um, you know, there was so much money printed, and it was a great time to be a seller, but not necessarily a buyer. And it's shifted, right? And right now, finally, we feel like sellers are getting realistic with their exit valuations, with their cap rates, and where the market has gone. And for a long time, that just wasn't the case. And so we do a lot of different things. Obviously, big one being brokers, right? But we have for a long time not relied on brokers, so we've been really good at finding off-market deals, and I believe that you have to have a lot of irons in the fire. So we do, cold calling, we do mailers, we do text message marketing, we do email blasts, we go after expired listings, we go after listings that are about to become expired. So I would say that, you have to have lots of different ways to bring in deal flow. And if you do that, it's a numbers game and you're going to end up finding what it is you're looking for.
that's awesome. You said something very interesting. You said you like creative deal structures, right? Other than just a seller saying this is my price, you saying yes or no. Well, what do you mean by a creative deal structure? What does that look like?
Yeah, absolutely. So anytime we don't have to use a bank, uh, that is a huge value add piece, in my opinion. So getting really attractive seller financing terms. And what I mean by that is, typically what we see is that if we're going after a project and we can figure out the seller's age, and if they're over 60, there's a high likelihood that we can get really good seller financing terms. And the reason being is a lot of people over 60 is that they are, going into a different stage of their career, of their life, into retirement. They're not looking to, have that day-to-day management and headache. They want the, ease, right? They want cash flow. They want to go live their life, travel, whatever, to spend time with family. And so, what is more attractive to a seller is not just, hey, I'm going to sell my property and go stick it in the stock market, which I have no control over, versus saying, hey, why don't you finance a property that you've already owned for 10, 20 years? You know more about this property and this asset than anybody. And why don't you be in the first position to, finance it to somebody else, right? And now you've got consistent cash flow on an asset that you know better than anything else. So,
Sure.
seller financing, fantastic. If that doesn't work and they truly want cash, there are other ways to do that. And that could be master lease options, that could be a second, it could be preferred equity, it could be, hey, I want to get around the tax piece, but I still want to get a majority of my cash. So you could bring them in as a LP on the new acquisition of their own property and do accelerated depreciation and give them an allocation of that depreciation to help offset their gains. It could be, hey, why don't we take over and we'll at close in the following tax year. There's just so many different strategies that you can do with that, and I love to keep a seller involved in every deal if possible. It's truly a great way to make a great deal.
Sure. Yeah. And like you said, they know the property better than anyone. They can manage it better than anyone. So they can kind of hand the keys over to your team over time rather than just passing it to you and leaving.
Right, and there's no better collateral for them, honestly. I mean, that's what I hear the most of is like, "Oh, I plan on selling and then putting my funds in the stock market." And I'm
Yeah.
like thinking to myself, "You have no control. It's very volatile. Like, you can't get the same amount of cash flow that you could probably get if you just sell or financed your own property."
Yeah. And depending on the number, I mean, the tax bill they would be saving by taking it over time is incredible, right? That's awesome. So when it comes to where we are today, what is it that you're focusing on? You said, creative deals. You said you guys cold call, you guys have brokers that you work with. What would you say over the next 12 months you're looking to accomplish within the business saying, we did it, right? This is what we went out to do and we did it. What's that goal now?
So, kind of, yeah, that's a great question. And we've talked a lot about it. And we actually have this company goal that we would like to help more people get into commercial real estate and partner with us on a JV aspect. And what does that look like and what does that mean? That means right now our goal is to take 10 people and make them build like a 20 to a $50 million portfolio with each of them. And so basically when I got started, I didn't really know how to do it. I didn't know, where to get funds. I didn't know how to do any of that. And it all came back to finding the right people to back me. And that made all the difference in my career once I found that. Someone who, people that would come in and back me from both, whether that be financing, signing on debt, management, asset management, whatever it may be that, they're lacking. And for me, it was lacking a lot, but was able to bridge that gap. And I feel like there's a lot of people out there that have the hustle, have the grind, are willing to do it, but they need some hand holding. And so over the last couple years, we've been doing a lot of joint ventures with young guys that, and not necessarily young guys, but driven guys that are want to get into the space and they have a big vision. They don't want to just do one deal. They want to go do, 10 deals or more. And we have created kind of a platform to help guys do that by partnering with us and essentially utilizing our platform, our resources, right? So that's kind of the goal over the next year is we're pretty much doing about 2 to 3 new partnerships a year at this point, and it's been going great, man. It's been going really great.
That's incredible. I love to hear that. I mean, real estate's such an amazing asset class. It's what's the stat, like 73% of millionaires or something crazy like that is through real estate, right?
Yep.
But that's a really awesome goal, and I appreciate that, and I'm excited to follow your journey through that. Um,
Yeah, I'll give you one other stat that I think is really interesting is the average person to get into commercial real estate is 48 years old. So that
okay.
just kind of tells you a lot of the sellers that we're targeting are guys that, bottom, in their 40s. And, now when they're looking to sell or retire, they're in their 60s or 70s, right?
Hmm.
So yeah, everyone thinks, it's a good old boys club, that you have to already be wealthy, that you have to know people, and that's just not the case. It really isn't. I bought my first true commercial building at 25, and so yeah, I'd love to see more people do it. I'd love to partner with more people, and yeah, we'd love to do more joint ventures.
That's awesome. And to that point, and to your stat, right? I mean, the silver tsunami they call it, right? With all the baby boomers retiring, the trillions of dollars in 401ks, all of the money that is going to pass down to the next generation. That's in 401k assets, that's in businesses, that's in things like real estate as well. So it's such a good time, like in the economy, to be in a position like you are, where you're actually looking for those deals and looking to not only build your own portfolio and help others build theirs, but also help that generation, the baby boomer generation, kind of have that comfortable and consistent retirement that they can count on as well. Right. So
Totally.
it's kind of a full circle moment. That's pretty cool.
It is awesome.
Awesome. So is there anything I guess, we talked about a lot of good that you're doing, a lot of growth. What would you say, other than you mentioned hiring employees and things like that, are some challenges that you're seeing in the business, number one, but number two, with the adoption of technology, right? With marketing, with artificial intelligence. If and how are you using that when it comes to your organization, whether it's your CRMs, whether it's your tenant managements, what does your operations look like when it comes to, adopting those technologies?
Yeah, I would say that really it is implementing, the AIs in the day to day, right? And so what we're seeing is like things that we implemented a few years ago are becoming obsolete, and you have to stay on top of it with AI, with different platforms and technologies. And so, I would say that's like the number one challenge is like figuring out what is the best approach, and are we going to spend all this time to implement this certain aspect just for 24 months from now, it's going to be obsolete again, right? So it's just one of those ongoing things that I think, we're looking at and saying, you got to be on top of it, otherwise you're going to get left behind. And we're looking at new stuff all the time. Every week there's something new that comes out that we're like, hey, this looks really interesting, and it could be very advantageous, for our company. But at the same time, based on the amount of time that we're going to have to actually implement it, is it going to make sense even 24 months from now? And that's kind of the hardest thing to really judge, right? So, yeah, we're kind of in that whole realm right now of figuring it all out.
Yeah, and that's a smart, right? Because you want to be able to focus on what drives the business, right? And if something new's coming out every day, you want to make sure the core is tight before you kind of look at the shiny objects.
Yep.
Awesome. So, is there anything that you want to highlight here that we haven't really touched on just yet?
I would just tell you that commercial real estate is a beautiful business to be in. I am beyond blessed that I found it at such a young age, and I want to share it with the world because I feel like it truly is just an amazing business to be in. So if you haven't looked into it, it is something to really dive into and to really learn about. And ultimately, yeah, it's a great tool.
That's awesome. And Danny, if someone wants to learn more, wants to get into commercial real estate, wants to maybe be one of your JV partners, where can they learn more about you and where can they find you?
Yeah, absolutely. So they can go to our website, vailcommercialgroup.com. Happy to chat with you if you want to set up a call. You can email me direct at Danny at vailcommercialgroup.com, um, or any of my partners on the website. So yeah, happy to just chat and take a look at our portfolio at the website. We've done quite a few projects, I think around 60 commercial real estate projects. So it's been a good ride.
Awesome, Danny. Well, thanks for jumping on with me here, and hopefully the viewers get a lot of nuggets out of this and a lot of good information. And we'll talk soon.
Thank you, Christian. Have a good one.
You too.